Let's bring in Cornelia Meyer. She's an economist and commodity analyst and CEO at Meyer Resources. Hi there, Cornelia. It's good seeing you. Thanks for joining us. So, as we just said, oil prices are moving back toward the $100 a barrel mark, but we're also seeing stock markets push to fresh highs despite these escalating geopolitical tensions in the Middle East. Why do investors appear so relaxed?
Well, I think they might not have seen just how critical the issue is. You're right, it's driven by the hope for AI, by about $4 trillion worth of currently privately held wealth coming into the market with OpenAI and SpaceX and so on. It is also, so there is enthusiasm there. But let's not forget AI needs to be powered, and energy is very important for powering AI. So that's one. And I think that there is a little bit a lack of awareness just how dire the situation is. Right now, yes, there is some oil around, but we're living on borrowed barrels from inventories, private inventories and national inventories. And they're depleting really fast. So when they're really down, then we'll deal with actual physical scarcity. We've seen some of that already in Southeast Asia, but we'll see it then on a broader scale.
There's scary projections there, particularly when those borrowed barrels, as you put it, run out. So I've got to ask you about what some analysts are warning, Cornelia, that a prolonged blockade at both the Strait of Hormuz and the Red Sea could send oil toward $200 a barrel. Do you see this as a realistic scenario? And pray tell, what would happen? What would be the economic fallout look like?
Well, I have a personal policy never to predict the price because the price is unpredictable. But yes, what we can say is if we're really at rock bottom on the inventories and and the strait doesn't open soon, we will see physical scarcity, and physical scarcity will drive the price up. And what we will see is richer OECD nations and richer East Asian nations competing for barrels, competing for LNG cargoes, and they will be pricing the emerging market countries out of the market.
All right, I get your point, and you're not wanting to predict about that $200 barrel. But at some point, Cornelia, higher prices begin to destroy demand as consumers like you and me cut back and businesses scale down their activity. Where do you think, though, that tipping point lies for oil prices?
It has already started. We saw yesterday somebody at a conference saying, okay, he thinks 4 million barrels of demand destruction has already happened in Asia. So yes, that demand destruction has started to happen. The question then is it a permanent demand destruction, or is it a demand destruction that will last for until the crisis is over, and then demand will gradually creep up? So we will have to see. Demand destruction is happening. We will have to see how permanent it will be.
Cornelia, really good, / concerning speaking with you. Thank you so much for your time. That's Cornelia Meyer at Meyer Resources. Thank you.
Thank you very much for having me.